In this episode of Share Bingo, we are looking at Next. So just logging into Hargreaves Lansdowne here and pulling up the information on Next. Here we go. And as we can see, the price per earning is 16.69. So that is nicely within our criterion of less than 20. So off to a good start. So just confirming that tick in the box on the bingo sheet now. So the next item that we're looking at is, do we understand what the company does? So Next is a clothing retailer operating out of the high street and online. It deals in footwear, clothing, accessories, beauty and home products. Next is a pretty well-known company here in the UK. I believe it's definitely something that we understand the market and we know what they're doing. So yeah, I think that is a tick in the box for do we understand the company. And the third thing that we're looking at here is what markets Next is on. And as you can see, it's on the FTSE All Share market, so it is a full listing on the stock exchange. So once again, just putting those ticks in the box for do I understand the market and a full listing on the stock exchange. So moving on to charts, and look at this for a 1 year chart. It's really moving in the right direction, definitely in an upward trend. So that's what we like to see, and that's a good tick in the box for this one. We're very happy with this performance. Now moving on to 3, 5 and the 10-year chart. Looking at, first of all, for the 3-year chart, as you can see, it's definitely in an upward trajectory. We're much higher now than we were 3 years ago. Moving on to the 5-year is a little bit more stagnant than the 3-year. We seem to be recovering from a low period in the company's history, but the important thing is that we're still upwards. And look at that for a beautiful 10-year upward chart. It's something that we really like to see. We've definitely increased quite substantially from where we were 10 years ago. So overall, that's 3 upward trends for 3, 5 and 10 years. So that's another tick in the box. So moving from charts, we go into director buys for the last 12 months. And as you can see here, everything's red. So it's all sale. This is not what we like to see. We do like to see some substantial buys from the directors. As you can see, there's one there for 100,000, but I don't think it's really enough to it doesn't reach the significant transactions over the last 12 months, so I don't think it's enough for us to give that a tick in the box. So unfortunately, in this instance, director buys is going to have to be a negative. Moving on to my now absolute favourite part of owning a share, and that's dividends. I think they're a really important part. As you can see, we look for a dividend that's been growing year on year, and also more importantly provides one year on year. As you can see there, 2016 it was 278, 2017 it was 203, 2018 it was 248, 2019 it was 165, and then last year it was 57p. So whilst that's not growing year on year, I think the real important standout factor is here that the actual dividend, the interim and final one, did grow or stayed the same year on year, and then the company provided 2 special dividends in some years. So I think that we really like this. It's growing, they're providing. So yes, this is a positive and another tick in the box. Our next category is history of the company. So what we're looking for here is the company to have a 10-year history. Has it returned financials for the last 10 years? So just looking on Morningstar here, bringing up that information. And as you can see here, absolutely, the company does provide a good 10-year history, highlighted by the pre-tax profits for the last 10 years. So this is what we like to see. This shows us that the company can be trusted, that they're not likely to fall away. So therefore, we like this, and this is another positive tick for us. We're doing well. 10-year history confirmed. Now that we have confirmed that the company has had 10 years of history and it's not going anywhere and it's a stable company, we want to look at its profits over the last 10 years. Ideally, we want to see that the company has made a profit every year for the last 10 years. And as you can see there, the company has made a profit from 2011 all the way up to 2020, with the profits pretty much rising year on year, with the highest being 2016. So yes, guys, the company has made a profit every year for the last 10 years. All looking good so far, but the next thing we want to check is the debt that the company holds. So as you know from our bingo cards, we like to have the debt less than 3 times the profit, and currently the company holds 2.488 billion in debt. Now that is a significant chunk of debt. So 2.488 billion in debt is a significant amount. However, it all depends on how that translates when it's compared against the profits. So we're doing a quick calculation here. As we know, the profits recently was 748 million times 3. So that gives us 2.244. So unfortunately, we're just slightly over that 3 times. So we have to mark that as a negative. So this is our last fundamental key marker here. Is the market capitalization of the company less than 15 times the profit? If we get this one correct, guys, or if this falls within the criterion, we have our first share that we could look at buying to compare it against the index tracker. So as you can see here, the market cap is 10.48 million. We take the 748 million in profits, times that by 15, and it's 11.22 billion. So we're well within that 15 times the market capitalization, and it is a positive tick, and we have now hit 9 out of 11, which means that this will be the first share we can invest in.